Welcome to Real Smart, the real estate podcast you've been waiting for. I'm Spencer Kallick, a real estate and land use attorney at Matkins. On this show, I sit down with some of the most dynamic and accomplished voices in real estate to explore trends shaping the industry and uncover what truly sets great leaders apart. Hi, everyone, and welcome back to Real Smart. Today, I'm really excited actually, to welcome a powerhouse in the commercial real estate world. Ladies and gentlemen, Mike Longo, Senior Vice President at CBRE. Mike brings over a decade of experience and has been involved in more than, get this, $20 billion in commercial property transactions. He's a key member of CBRE's Investment Properties Institutional Group, partner in both the National Partners Industrial Team, Southern California, Institutional Office Capital Markets Partnership, a lot of big words, but this guy gets deals done. From overseeing large-scale positions across the West Coast, working with institutional clients in high-stakes deals, Mike has had a front row seat to some of the most significant market-making transactions in the country. Whew. Mike, welcome, my friend. Welcome to the podcast.
Quite an intro.
You know, when we named this Real Smart, we thought about Mike Longo, so here we are.
You said, let's do the opposite.
No. Come on now. Well, Mike, let's talk about this for a second. $20 billion in transactions. That is a lot of transactions, but I know, you're experienced in this game. You've done a lot of transactions. What kind of key market trends have you been seeing that are remaining constant or changing? What's changed the most over, call it $20 billion? It's an impossible task to answer that question, but curious your thoughts.
Yeah, I mean, that does sound like a big number when you kind of round it out like that. But the bigger the transaction actually doesn't mean the easier the transaction. So as you're very well aware, we just happen to kind of be the institutional team that covers, large scale transactions, portfolio, national portfolio, et cetera. And just, having done it now since the beginning of the GFC up through kind of the latest cycle, it's just, it's a pretty heavy volume game. I think what's changed in real estate, especially when you get into kind of the institutional advisory space, is it's just become, transactions are more streamlined. The timeline it takes from kind of start to finish is a lot easier. Everything is electronic. Your communication is largely electronic. The firms that buy are very, very well founded. They're organizationally really adept at kind of taking things on in a very short amount of time. The legal teams that cover these transactions.
Legal teams, I don't know what you're talking about. There are other lawyers around here?
I only mean Matkins. When I say legal teams, it's just one thing.
There you go. That's what I figured. I appreciate that. Yeah. Thanks for the clarification.
It's just, the volume has sped up quite considerably. And now it's not uncommon for our team, me specifically, to be running upwards of 20 transactions at any given time in one moment. So our team on the West Coast, just our national industrial team, covers about $5 to $6 billion of transactions a year. So
But so let's stop for a second, because everyone tells me the deals are not getting done right now, and that, it's impossible, and industrial is impossible, and, capital markets are insane. Nothing's getting done. You're just the opposite. So what's don't give away too much special sauce here, but what is the Longo special sauce that's getting these billions of dollars done?
There's no Longo special sauce. I mean, when you're dealing with the institutional space, there's only a handful of firms that do what we do, right? And transactions, the way that capital is raised and the way that the institutional space invests in real estate it's transactional in nature. So good times and bad times, there's always going to be flow of volume. And where it gets really kind of sticky and hard to transact are in those periods of change. And we had one of those big periods of change when the Fed started raising rates, and you saw kind of the post-pandemic whiplash. There was this, and we're still kind of in it, about a 2-year period that it was really challenging to transact, because people are evaluating all of their positions, re-underwriting all their positions. That's a hard period to transact in, because everybody's in their mind thinking, oh, it's going to get better. It's going to get better.
It's already getting better. What are you talking about?
Yeah.
It's already getting better.
It's getting better.
We got a war. We got a couple of wars. But it's always getting better, right?
Tariffs are behind us. Yeah, everything's good.
So let's talk about Southern California, because I know you really focus on Southern California.
Yeah.
And you started talking about kind of this post-COVID era, 3 to 5 years, if you will. What is making Southern California, let me back up a second. Everyone's leaving California. Southern California is dead. They're all moving to Texas. They're buying deals in Austin and in Dallas. but you're getting deals done all day long in Southern California. So what are you seeing as kind of the trends? What's changing here specifically in Southern California?
It's so easy to amplify things. So your question is like, what are some of the preconceived notions of like people are vacating California, and then like what's the reality on the ground?
Yep.
And the reality on the ground is, you can read a headline, you can talk about, people leaving the state, you can talk about how taxes and our government regulation is really impeding growth. A lot of that is true. There's no question about it. And we're trying, with your guys' help, to get in front of that stuff, and we can talk about some of the development regulations. We can talk about EULA. We can talk about rent control all day long.
All these things are just making it really easy to transact
yes.
here in Southern California.
But at the end of the day, this is still the sixth largest economy in the world. And population, I think trends are a little bit overstated. Certainly when you talk about Los Angeles, the cost of living and things are really challenging. But, we're not one thing, right? And when I think about Southern California, specifically Los Angeles, I think the economy generally, I think people think of it as, Hollywood town. Hollywood's a very small segment of our economy. We're really a port town that likes to sell itself as a Hollywood town, but we're great at selling out here.
So you said the word port, so I've got to say the word tariff.
Yeah.
I'm curious, tariffs, are they here, are they not? Gosh, by the time this podcast comes out, we might have higher tariffs, no tariffs, who knows? But talk about right now, what are you seeing? How are tariffs impacting particularly the industrial sector where you're so active?
Man, it's really complicated. I can tell you from our deal transaction side of things, after the first week of April, we saw a little bit of a hard breath.
Hey, what's going on here?
What's going on? And, at any given time, I talk to you about the number of deals that we're transacting, and we track it all. So we tracked it on the West Coast, we tracked it across the country, and we didn't see that much immediate impact. We saw some investors take a pause.
Because you don't want to be that guy that all of a sudden did a deal and then the tariffs blow it all up and you look like an idiot the next day.
Most transactions, barring, a couple, and I mean a couple, I mean like one or two, like that's it. Across like a book of probably 50 at any given moment that's transacting across the country, pulled a transaction, nothing was retraded, which is really interesting, I think, because a retrade has to be retraded based on some metric, and there was really no metric to retrade based on.
People are still not sure how it's being calculated, collected, when,
When and what, like our rent's gonna fall. And interest rates really didn't move. They've been kind of hovering in this kind of mid 4% range for a while. So as we fast forward, who is really impacted were certainly going to be the Asian 3PLs. And Southern California is heavily, heavily impacted by our Asian counterparts and kind of the imports that we're pulling in from there. I mean, the ports of LA and Long Beach are 80% of the Asian import market.
Yeah, and you're seeing reports that all of a sudden the imports to at least to San Pedro or Long Beach are cut in half, a quarter, a third, whatever it is.
So
really not good for what you're seeing.
The stats are actually, and they just released the May stats for the ports, and it's about 20% average between the two.
You mean 20% decrease?
Decrease for that month, from April to May.
And before that was another 20%, probably.
No, it wasn't. April was actually an up month. So we're only talking about 1 month of stats that we have right now. And we haven't seen June yet, obviously. And you really won't know probably until we're into kind of the middle part of the summer how it really impacts. But those stats were a lot better than I thought they were going to be, like surprisingly better. And when you look at those stats relative to the year prior, so like, May this year relative to 2024, it's only down about 6% from prior year.
Interesting.
So I think generally speaking, you can't change the supply chain overnight. And yes, you can allow businesses, you can force businesses to say, what am I doing? But most businesses can't do that on a whim.
Yeah, they can't turn the literal ship that quickly.
Exactly. And so most of the conversations you have on tariff are less about like, what does it mean for the overall economy, and just more uncertainty in how the system works.
So let's talk about more uncertainty. And I think we've talked about, I'm honored to be able to partner with the UCLA Anderson School on our Allen Matkins survey. There's been a lot of discussion recently about the impact of capital markets, and, tariffs might be a newer thing, but the kind of rising and shifting tide relative to capital markets been going on now for a couple of years. And so how are you seeing deals getting done, clients, institutional investors dealing with the rockiness or the choppiness in the capital markets?
Well, we talked a little bit about it at the gate, but again, it takes a long time for the market to reprice. When you spread your interest
You mean
rates.
those BOVs that you guys have been doing, people still don't quite understand or believe that it's really worth that much less?
Well, and they're not incentivized to, and you know better than anybody how these institutions carry assets on their books, right? Real estate is not a public market. So these valuations don't get reset daily. They get reset based on appraisals.
They get reset when Mike Longo says, hey, your property is really not worth what you think it is, but here we could probably sell it in a package with this group. And
yes, and it gets reset because you have data points. It takes a long time for data points to set. I mean, if you think about a transaction cycle, you hire me, which you should, to sell a building.
Obviously.
From the time
What's your phone number again? No.
It'll be at the end of this.
There you go.
From the time, oh my gosh.
Click this link at the bottom here.
Brokers aren't that bad, okay? From the time that, you hire us to do a BOV to the time that that transaction actually takes place, it's roughly 6 months. That's a long time. A lot happens in that 6-month period of time.
At least 6 months. I mean, you've been working on deals, I know, because you and I worked on a couple where you've taken literal years to get these done.
Yeah, and the timelines only get drug out now as you get into these periods of uncertainty. And so like in 2023, for example, 22 is our record year, right? Like the most transactions we've ever run in the history of our team, like wild, right? 23 hits, everybody's freaking out. Nobody knows what to do. Nobody knows how to price. So when you're pricing something, either it's on your own books or you're asking us to price it for you, you're doing it based on very limited information when the market resets almost overnight. And so what happens is you get this long protracted period of data points failing to print. And so from 2023, from the number of deals that we got assigned, listed, brought to market that actually transacted was only like 30%. It's a lot of work for us.
It's a lot of hustling. Well, and I know you literally put your heart and soul into all these ones. So this is not an easy thing to do.
No, but the market was moving in weekly. And so if you are promising your investors one thing, the market gives you another, it's not going to transact. And more than anything, while we like to tout ourselves as like making the market, we're really reflections of the market, right? And
because you're doing the most deals compared to your competitive set is what you're talking about.
I appreciate you continuing to build me up.
Why else would you be here, my friend? No, it's also, look, the numbers don't lie. I mean, you guys are doing a lot of deals. All right, so let's take a step back for a second. Let's talk about Mike Longo, or as I affectionately call you, Longo.
Fun.
Well, we'll get there in a second, but tell us a bit about yourself. How did you get into this crazy game? Why are you sitting here right now, besides you were kind enough to come and hang with me today? Tell us a bit about yourself.
Yeah, I mean, I'm like any other person, grew up in LA, didn't get very far, went to USC, have a great network of friends that are also in the business that I had from before, but also have kind of fostered through working in this world. And, real estate's a great business because it's a long business and it's really about the relationships that you foster and build over time. And I started young and I worked those young relationships. And now as I've gotten older, although albeit still pretty young, a lot of those relationships that kind of start as analysts, as associates, kind of become people that start running their own businesses or are now kind of the decision makers at firms. And so that helps. And I do feel like we're at a really interesting kind of transitional point within not just real estate, really across a lot of sectors as kind of the boomers are thinking about retirement. Most companies, if they're smart, are having real succession planning kind of conversations, and that transition's happening live.
Very much so. Yeah, I mean, both in your business and my business.
Yeah.
So talk to me a little bit about how that has occurred at CB and what you're seeing. And I mean, you're taking on all these different leadership roles.
Well, I mean, let's be honest. I was born on a little bit of a silver platter as it relates to real estate, and I'm the first
we
one
all
to
appreciate
admit
our
that.
parents. We all appreciate our
We
parents.
appreciate our parents. My mom is really the one who kind of set the groundwork for real modern brokerage and advisory work on the institutional level. And
The OG Longo.
the OG Longo, the Darla Longo. And so I obviously owe, really everything to kind of what she's built. And I'm just kind of trying to draft and build with her team that she's created to kind of grow that forward. But I didn't start on her team. For 10 plus years, I was doing my own thing, really working the office market in Southern California. This is why I kind of do both practices. And about 5 years ago, we decided to start merging over our practices. And now I sit on both capacities.
So how big of a team now? I know on different deals you got different groups, but
Yeah.
kind of your core crew.
Yeah. So Our national industrial partners at CBRE is a really unique system. We actually have a full partnership across the country. So all 5 markets, we have over 35 brokers that run the country, and we have one P&L. We share all fees into one book. On the West Coast, though, we have partners up and down the West Coast. So I have 9 separate partners.
Sounds complicated.
And then on the office side, I have a couple other partners. But you know what?
How do you even remember like who's your partner on this deal, that deal? It feels like, okay, I will give you more stress.
No. I honestly think that, the problem with, maybe I'm being too honest, but like,
it's one of the things we appreciate about you.
Yeah, the problem with modern brokerage is what the client wants is they want it all. They want it all. They want
shocked to hear
everything.
You say that.
They want they want everything.
In the legal field the same way, so it's all good.
They want everything that CB has to offer, which is a lot. They want leasing, they want research, they want our private capital team, they want all the exposure, they want our massive institutional team, they want your relationships, right? And so, but these teams in kind of the old structure of brokerage are set up in silos, So what we've been trying to do in kind of my favorite word, organic way, is to kind of break some of those boundaries down and to create real connections and partnerships across the lanes. So there isn't this individualized kind of brokerage mentality.
So on your kind of day-to-day team, the people you're working with, interacting with, 5, 10, 15 people?
Yes.
Yes, all the above. So talk to me. I mean, you've got
like today. It's a Monday.
Yeah.
I think. Oh man, I have 4 calls on Monday with different teams. And I share insights across all of them. And I was 5 minutes late to here because it was on my national call, right, where we're sharing insights across.
There's no politics in brokerage.
Zero politics.
Yeah, that's what I figured.
Zero politics.
So talk about, you're running a team of 5, 10, 15 people, but you also got national partners, dozens and dozens across the United States. Talk to me a little bit about the Mike Longo theory of leadership, or practice of leadership. Maybe less theory, but how do you kind of keep connected to everybody? How do you, walk the walk, talk the talk, but also make sure that you deal with the challenges that you're dealing with internal to your team?
I think it comes from aligning with people that are really good, moral-minded, similar-minded people. And I think that comes from really focusing on, okay, who are the partners that we're going to bring into this? Do they think like us, right? There's a lot of brokers out there who, again, are extremely individualized in how they approach things. This is the trait that we really move away from, right? And so when we bring somebody into what we're trying to do, they have to be on the same mindset of really team-oriented thinking.
So that sounds fantastic. What happens when that doesn't happen?
It becomes challenging, but over time things kind of work themselves out is how I kind of approach it. And, again, I'm only young in this business. I've probably got a lot to learn on that front, and I'm going to run into a lot of challenges, but it's a hard thing. I think you really have to come at it from how am I going to best, and I know this is going to sound silly, but
you can
how am I going to best serve the client, and let's put the client first and put our own individual monetary goals or whatever we're trying to accomplish secondary, and then things just kind of fall out where they are. And if you keep the person in the front of your mind at all times, not yourself, then I think generally things work out.
I love it. So talk to me a bit about, you deal with a lot of young folks, a lot of people who are kind of just getting into the business. They come to you, they see you're killing it, and they're like, how do I do this? So talk to me a bit about some of your advice and practical knowledge for young folks out there who are watching, listening, thinking about, hey, I'm kind of getting started in the real estate business, whether it's brokerage or on the capital market side or what have you. If you could go back and tell Mike Longo of a decade or two ago what to think, what would you say?
I would say, and you're really good at this, don't lose yourself, be yourself. And it's so easy to look around and see what other people are trying to be and try to mimic that. And in that process, people kind of lose a sense of who they are. And people are smart. They read people extremely well. And when somebody senses that you're not being real, it's hard for people to connect with you, And so have a good sense of who you are and really try to put that into what you do. Make it personal and make it feel right and real. And then from there, you've done an extremely good job at this, is just crafting your sense of identity and your brand, your personal brand. And again, that personal brand doesn't have to be over manicured and sound like it's this big advertising thing. No, it's just who are you presenting? Be that person every day and try to follow through on everything you do. And I think that would be, you can go a long way, whether you're the best in the whole world, if that's what you really want to aspire to, or you just want to have some really good clients who respect you and like to work with you. That's also a great thing. There's a lot of money to go around in this business. It doesn't have to be, biggest broker, top in the world, whatever. Yeah.
That's amazing advice. By the way, what you just said is 100% true, and you actually live it every day, right? So obviously, I know you, we've been friends for a while, and you are, like, everyone knows you at Longo. You're the man. Like, everyone, you wear the silly, crazy outfits sometimes. You're out there having fun. But
I really thought this wasn't on camera today.
No, but at the same time, you're killing it. At the same time, you are, when most brokers are, killing themselves trying to figure out how to get deals done. And by the way, I know that you're killing yourself trying to figure out how to get deals done, but you're doing it. Even in one of the most challenging real estate economies that we've had in decades, you're getting deals done because people know this is just the deal, and you have a track record of that. So,
oh well, thanks. No, again, we got it's a hard world out there, and try to have fun with it, and try to do it with people that you like.
Yeah. So talk to me a little bit about if we were here a year from now or 2 years from now, sitting right back here, your hair will be down to your shoulders by that point, as the Mike Longo cool look, hair look here. I'm jealous, dude. I don't have.
I know. This is really just
locks.
me trying to make other people jealous.
Yeah,
that's all this is.
I'm very jealous, as you can see. What are we talking about a year from now, 2 years from now? Are we going to be talking about interest rates coming down? Are we talking about capital markets? Are we talking about data centers are still hot as can be? Like, what's the Mike Longo prognostication of the next couple of years?
I think that as it relates to capital markets and real estate in general, I think the biggest problem that we have is not necessarily an interest rate problem. I think we're now kind of readjusting to modern interest rates. And that's not a bad thing. Having a little bit of elevated interest rate and kind of pricing that into how things flow and trade is okay. What we need is clear path on growth, and investment really thrives on growth. Like, I always tell all our analysts, I'm like, you can make an IRR do whatever you want. You throw in a couple,
switch around a couple numbers in Excel, and
drop
you're
your
good to
exit
go.
cap,
Yeah, look at that.
Increase your inflationary rent growth, and boom, you got a 15 IRR. You can make it do whatever you want.
I would take a 15 IRR. That sounds like not a bad deal.
If it's real.
Yeah,
it's real. So I think there's going to be a couple trends. I think one, as this new kind of round of capital gets raised for real estate, it's going to be raised not necessarily on real industry growth, but more on cash flow. And I think real estate should go back to kind of what it originally was, and it is kind of a very cash stable, protected investment that has other benefits as well, depreciation, et cetera. And if they can pass this bill, that would actually help real estate quite a bit.
The big, beautiful bill, you mean?
The big, beautiful bill.
Big and beautiful for Mike Longo, you're saying?
No, not for me. I should be more invested in actual real estate I sell to actually see that. So I think that'll be a trend, but I don't know. I don't have a great crystal ball on what that next growth pattern is going to be. There's a lot of uncertainty out there. Data center certainly was and still has real growth potential, but how power is generated and consumed in 5 years from now, I don't know.
Well, hopefully they're going to make it less power intensive, or we're all going to be using nuclear power or something along those lines. But
there's so much science out there. That's way above my pay grade. How e-commerce continues to penetrate into industrial real estate. I still think that's a real trend. But does industrial real estate become more efficient? In all of these ideas, there's money to be made, right? Because that means change creates opportunity. And so it's about getting in front of those kind of things. That means there's going to be some losers, and out of that there's going to be some winners. And it's about kind of finding where those trendscapes are going. And I'm not going to give away all my ideas on this.
Yeah, I want to. Don't exactly. You come back to another time. We'll do another podcast. It'll be like, hey, by the way, exactly. Well, one of the trends that I know has been public is you're taking what I'll call headquarters for different companies out to market, maybe office headquarters, and folks come and gobbling them up. It seems like you've got a handful of those been going on. Tell us a bit about kind of some of those deals and where the trend is going. Are you seeing more headquarters that are going to be sold with leasebacks, or what are you seeing right now?
Well, the person they should call is you, because
call you first and then maybe call me.
The idea has to be generated from a space becoming available for sure, but especially when you talk about California real estate and you're talking about change of use, the first question you need to ask yourself is about zoning and the politics of the city that it's in. And that's really where you guys come in, and we've created a great partnership on that have allowed us to have really clear path into what is possible and what's not possible depending on where it's located. But we've certainly had a lot of success in that. And I think that's only going to continue. At this given moment, I've got 3 or 4 office teardowns, 2 industrial or housing under contract or at some stage in the process. And we have a couple more coming, one specifically in Burbank that's going to be really interesting.
I haven't gotten a phone call about that one yet. It's coming, right?
It's coming.
Okay, good.
But yeah, I mean, we did the Herbalife headquarters, and that was technically City of LA. We did the DirecTV building up in Long Beach, which is going to get torn down and potentially go to data center or industrial. We're working on the Forever 21 former headquarters. It's kind of a adaptive reuse kind of concept. So there was a number of these, and I think it's only going to accelerate as real estate really does need to be put through the lens of like, is this really right for now? And how do we do this in the most effective way? But it really comes from a city first mindset, and you have to approach it like that.
You were always very kind to call, and I'm always very happy to chat with you about how we get some of these deals done. Because I do think in this economy, you've got to be a little more creative. You got to think outside the box, literally and figuratively. And things have changed as compared to a couple of years ago, where people, and cities in particular, are willing to have discussions that they were never willing to think about, even just maybe even 6-9 months ago, because they realize, gosh, economic activity is what's going to spur the growth and hopefully revitality of a lot of these communities. So
what do you think has been, I mean, obviously, like I always kind of fashion back to like, NIMBYism, right? And then how that changed so quickly. The city politics change, right? And their sentiment changes and what they want changes. Like, have you sensed any, with this kind of pullback in office, a lot of non-functional space out there? Like, do you think cities are getting more open to?
I think I'm supposed to be asking the questions here, not you. But no, I'm just, you can switch chairs with me. No, all good.
Okay.
It's a fair question. A lot of cities are thinking about things differently. Cities, unfortunately, are a bit of a dinosaur in that they, wait several years before they realize, oh gosh, we got a problem here and our tax basis is going down, what have you. But we are seeing conversations, and frankly, you've worked on or know about a lot of the deals we're working on that are former office buildings that we're scraping and building a lot of multifamily right now in a way that even literally 6-9 months ago, we could have never had these conversations. But now they realize, gosh, maybe back to office is not as compelling as people would think they would be, but we have a huge housing crisis. We've got to do something here. It's kind of a push and a pull kind of thing, but we're definitely having conversations that I wouldn't have dreamed of several years ago.
Yeah. I mean, I think LA City specifically does need to wake up a little bit faster. They're a little behind the ball right now. Sorry, I don't mean to get
No, it's true. Look, but so does Sacramento, right? And then you've got the friction between wanting to protect residents and communities versus wanting to bolster industrial real estate. We've talked a lot about AB 98 that has had a huge impact, I know, on your business. I know it requires a sigh from me as well at times, but you've got these poles of protecting communities versus creating economic vitality, and they don't always go hand in hand. Let's talk, I know we've got just a couple more minutes left. Tell me a little bit about Mike Longo, the man. Obviously I know you, but how do you, what is a normal day? How do you run this crazy business?
I think I'm a young father, and I think as you just kind of accelerate in life and what's required of you, it really just becomes kind of a time management game. And
but you seem like you're always working. Whenever I call you, text you, you're on it, you're on top of it, always on the go.
Well, I really try to leave weekends for my kids.
Amen.
And give your wife a lot of time too, because she's important for you.
Amen.
So it's just,
is your wife listening to this? Because my wife is listening to this.
She's definitely not going to listen to this. She's tired of hearing from me. But
she's like, I hear about this all day long. It's enough. I don't need to listen.
No, please send her the link. There's a chance she opens it.
Okay.
I think you just have to create priorities for yourself. And then it comes from working with people that help support you and work your deficiencies. Because I think the best way to be a productive person is to understand what you're not good at and try to complement that with partners that are good at those things. And I think that's where it really helps me a lot. I've got really, really good people that I work with and partner with.
And what do you do when you're not working besides spend time with the family, the wife?
Going to Dodger games.
Dodger games, yeah, that's good.
Love my Dodgers.
I saw Shohei pitch last night. That was pretty cool, or yesterday afternoon.
Oh yeah, the Dodgers are definitely, I love this season. I like to watch movies. I like to read.
You got your morning workouts, I know.
I do my morning workouts, although it's not really showing very well.
Oh, come on.
Once you get into your upper 30s, it's harder. I'm sure it's going to get worse. Upper 30s, I know, right?
Just an old man at this point.
Just old man. Just a really old man. Yeah, so that's basically what I do. Yeah, just try to create some headspace for myself when I can.
Amen. All right, before I let you go, what are you excited about right now? You're always excited about lots of things, but tell me one thing you're excited about in the real estate space.
In the real estate space, I am really excited about the reset. Like, to me, this is the first time in quite a while where it feels like seller and buyer expectations have kind of come a little bit more in line. That means that the world's generally kind of resetting on kind of where it was. And I think we're not in this period of hyperinflationary stimulus, but that creates arbitrage opportunities for creative-minded people to really try to do something different. And I really do think we're at a real inflection point on how real estate is approached and addressed and how capital does that. And I'm excited to see what that looks like over the next 5 years, because I'm going to be right in the middle of it.
So when is this happening? When is this crystal ball situation happening? We're going to have this reset.
We're in it right now.
We're in it right now?
Yeah, we're in it right now.
Okay.
Yeah, we're totally in it right now. I mean, you never know when you're in something that is happening, but it is happening.
But you've got the crystal ball. It's happening right now.
No, it's happening. There's a real transitionary moment that's happening right now in real estate, and it feels confusing and uncertain, and that's why everybody grumbles and complains that this is a horrible time to buy deals. And when everybody's complaining that it's the worst time to buy deals, it's the best time to buy deals. So that's why I think it's a great time. That's
you
why
got any deals, by the way, that people can buy right now?
Of course
okay,
I do.
Always. There you go.
Always.
Okay. It's always a great time to buy deals with Longo. We're going to call this podcast "Always a Great Time to Buy Deals with Mike Longo."
That's not untrue, right? It's not untrue. It's just about you. It's about finding the right thing.
Well, look, Mike, really appreciate you taking the time out of your busy day, coming down here, joining us on our podcast. Again, real smart. Really excited about you joining us and having a really smart guy like Mike Longo right next to me. All right. Well, thanks, man. Appreciate it.
Appreciate it.
The content of this podcast is for the general informational purposes only and does not constitute legal advice. Listening to this podcast does not create an attorney-client relationship between you, the host, guest, or Alan Matkins. You should not act or rely on any information discussed without first consulting a qualified attorney regarding your specific situation. Any opinions expressed are those of the individual speaking and do not necessarily reflect the views of Alan Matkins or its clients.